हेलो। अगर आप मेरी वीडियो पहली बार देख रहे हैं तो मैं हूँ कृति और मैं इस चैनल के माध्यम से यूजीसी नेट मैनेजमेंट से जुड़ी इनसाइट्स और उससे रिलेटेड एमसीक्यूज प्रोवाइड करती हूँ। हमारे प्रीवियस वीडियो में यानी कि कल के वीडियो में हमने यहाँ तक पढ़ा था एक्सपेक्टेड रिटर्न एंड स्टैंडर्ड डेविएशन। हमने इंडिविजुअल सिक्योरिटीज़ एंड टू पोर्टफोलियो सिक्योरिटी का कैलकुलेट कर लिया था। अब हम कैलकुलेट करेंगे फॉर नंबर ऑफ सिक्योरिटीज़। So you have this question where we have possible returns in percentage and we have probability Pxi given to us. Now, let's go to this Excel sheet. Here, I have listed the possible returns. Probability. Return is nothing but the product of possible returns and probability. Variance is as based on the formula which we have already discussed yesterday. So it is this probability multiplied by the difference of possible return and the expected return and the square of it. So it is basically the product of the square of the difference between possible and expected return and the probability. And standard deviation is nothing but square root of variance. So this is all the standard deviation of other various securities, its variance and the expected return. If you have any doubt with respect to this, you can comment on the chat box. Coming back to the slide. I hope this solution to this problem is clear to you all. Now, combining a risk-free asset and risky asset. What is a risk-free asset? It is one which does not have any risk associated with it. It means an asset with zero variance and so the standard deviation. Here comes the term efficient portfolio. An efficient portfolio is the one which gives maximum return for given risk and it assumes minimum risk for given return. और ये जो efficient portfolio होती है वो कैपिटल मार्केट लाइन पे होती है, जैसा कि हम स्लाइड पे देख सकते हैं। ये एक efficient सेट होती है रिस्की और रिस्क फ्री सिक्योरिटीज की and it shows the risk return trade off in the market. Now, अब ये तो हमने देखा कि ये जो कैपिटल मार्केट लाइन है which is CML, it helps to identify the portfolios which the investors must choose in order to gain maximum return or minimum risk. पर ये रेट ऑफ रिटर्न को क्वांटिफाई नहीं कर सकता है, ना ही एसोसिएशन ऑफ रिस्क विद द असेट्स रिटर्न को, और इसका सोल्यूशन हमें मिलता है कैपिटल असेट प्राइसिंग मॉडल से which is CAPM. That is why it is written on the slide as the capital asset pricing model provides a framework to determine the required rate of return on an asset and it indicates the relationship between return and risk of the asset. There are various assumptions of the CAPM model. First one is market efficiency. ये कहता है कि जो शेयर प्राइस है सिक्योरिटीज का वो उसके सारे इंफॉर्मेशन रिफ्लेक्ट करता है. Next is risk aversion. According to this assumption, all the investors are risk averse. It means they prefer highest expected return with minimum risk. Homogeneous expectation. This says that all the investors in the market have homogeneous means same level of expectations from the securities. Homogeneous stands for same level. An expectation which we all know, so when it is same level of expectation it is known as homogeneous expectation. Fourth one, single time period. सारे जो डिसीजंस है वो सिंगल पीरियड पे बेस्ड होते हैं। एंड द फिफ्थ assumption इज रिस्क फ्री रेट। सारे इन्वेस्टर्स बोरो और लेंड एक फ्री रेट ऑफ इंटरेस्ट पे करते हैं। इसमें एक अंडरलाइन कॉन्सेप्ट आती है सिक्योरिटी मार्केट लाइन की, जिसे हम SML कहते हैं। ये शो करता है एक्सपेक्टेड रिटर्न ऑफ एन इंडिविजुअल एसेट गिवन इट्स रिस्क। इस फिगर में हम देख सकते हैं द SML x axis represents covariance and y axis represents the expected return. अब यहाँ हम देख सकते हैं फॉर्मूला SML का। एक्सपेक्टेड रिटर्न इज इक्वल्स टू रिस्क फ्री रिटर्न प्लस expected market return minus risk-free return divided by variance multiplied by covariance. And through the following steps, we will derive to the formula of CAPM. This is the formula of CAPM, which is expected return is equals to risk-free rate plus expected market return minus risk-free rate multiplied by beta. We will discuss this beta separately on our coming slides. With the help of this equation, which we have seen earlier and you have in the top of it, which is this, we will solve this problem. So, information is given to you. Risk-free rate is 10%, market return is 15%, and beta is 1.5. What would be the return from this investment? So, we have risk-free rate, which is 10%, market return, which is 15%, and beta, which is 1.5. So, the expected return would be 10% plus 1.5, difference of 15% minus 10%. This is also known as risk premium. This one, expected market return minus risk-free rate, this is also termed as risk premium. So here we have 10 plus 7.5, which is 17.5%. I hope this problem is clear to you all. If you have any doubt or query, you can post it in the chat box. Let's move to another problem. The market risk premium is 15% and the risk-free rate is 5%. The beta of asset is 0.5. What is asset's expected return under the CAPM? So, the risk premium, which I already explained you, ERM minus RF, which is given to be 15%, RF, which is 5%, and beta is 0.5. We will put these figures on the formula and we will get the expected return as 12.5%. Now, arbitrage pricing model. So, what is an arbitrage? It is a situation in which an individual takes advantage of differences in prices. आर्बिट्रेज प्राइसिंग थियरी क्या है? ये एक मेथड है जिसमें कि एक मिस प्राइस्ड एसेट को उसकी एक्सपेक्टेड प्राइस पे लाया जाता है। और मिस प्राइस मतलब जब उसकी करंट प्राइस अलग होती है उसके प्रिडिक्टेड प्राइस से। There are various assumptions to an arbitrage pricing model, such as asset returns are explained by systematic factors. Investors can build a portfolio of assets where specific risk is eliminated through diversification. No arbitrage opportunity exists among well-diversified portfolios. If any such arbitrage opportunities do exist, they will be exploited away by the investors. अगर कुछ ऐसी आर्बिट्रेज अपॉर्चुनिटी आती है जिसमें जो इन्वेस्टर्स है वो प्राइस के डिफरेंस का फ़ायदा उठा रहे हैं, तो ये जल्द ही ख़त्म हो जाएगा, ये जो प्राइस है वो बैलेंस हो जाएगा। Now, what is this alpha and beta? अल्फा मेजर करता है कि किसी भी इन्वेस्टमेंट से हमें कितना रिटर्न मिला है किसी मार्केट इंडेक्स या अदर बेंचमार्क के कंपैरिजन में, और बीटा मेजर करता है कि किसी भी सिक्योरिटी के सिस्टमेटिक रिस्क को, क्या है इसके सिस्टमेटिक रिस्क। अल्फा हमें बताती है कि कितने अच्छे या बुरे से कोई भी स्टॉक परफॉर्म कर रहा है इन कंपैरिजन टू द बेंचमार्क और मार्केट इंडेक्स, वाइल जो बीटा है वो इंडिकेट करता है कि किसी भी जो स्टॉक है उसकी पूरी प्राइस कितनी वोलेटाइल है एज कंपेयर टू द मार्केट एज अ होल, और जो मार्केट पोर्टफोलियो होती है उसकी बीटा होती है 1। A high alpha is all, while high beta is subjective to preferability. Now, let's move to the MCQs. I hope the concepts which we have discussed yesterday and today is clear to you all. And so now we are moving towards the MCQs. The first one, alpha is an intercept of the SML line, an intercept of the CML line, the actual excess return on a portfolio during one period, a means of identifying superior or inferior portfolio performance. Second question, the return expected is equals to dash plus beta portfolio, return of market minus risk-free return, and the options are standard deviation, risk-adjusted returns, risk-free return, beta and alpha factor. So the answer of this would be, for 1, the answer is the intercept of the CML line, and for 2, the answer is risk-free return. Total risk for common stock is the sum of systematic risk and diversifiable risk measured by beta, sum of market risk and systematic risk, sum of diversifiable risk and unsystematic risk, and the fourth one, which is about market risk, is also called systematic risk and unique risk, non-diversifiable risk and systematic risk, unique risk and non-diversifiable risk, systematic risk and diversifiable risk. We have discussed this yesterday, only the words are quite different. यहाँ बस word play हुआ है, so I think if you will use your brain based on the yesterday's concepts, this question is as easy as you can think of. The answers for this would be, for third, it is the sum of systematic risk and diversifiable risk, and for fourth, it is B. Now, information is given to you about risk-free rate 10%, market return 15%, beta 1.2. What would be the return from this investment? And the options are 12%, 14%, 16% and 18%. We have already solved this. Do remember. Formula, if you remember, is RF plus the risk premium multiplied by beta. The second question, the sixth question, market risk premium is 15% and the risk-free rate is 5%. The beta of asset D is 0.2. What is asset D's expected return under the CAPM? The options are 8%, 20%, 7% and 30%. We will use the same formula. The answers are, for fifth, the answer is 16%, and for sixth, The answer is 8%. If you have not got this answers, please recheck of what you are doing, and if you have any doubt, I will expect your queries to be in the chat box. 7th क्वेश्चन, जो मार्केट पोर्टफोलियो है उसका बीटा क्या होता है? मार्केट पोर्टफोलियो हैज अ बीटा ऑफ 0, 1, -1, 0.5 or none. And 8th, which statement is true regarding the capital market line? We have 5 options, which says CML is a line from risk-free rate through the market portfolio. B says CML is a best attainable capital allocation line. C says CML is also called the security market line. D, CML always has a positive slope. And E, which says A, B, D are true. Let's see the answers. For 7, the answer is B1. For 8, the answer is E. A, B, D are true. होप सो कि जितने भी हमने कॉन्सेप्ट्स पढ़े हैं आज और yesterday वो सारे आप लोगों को क्लियर होंगे. सो इसमें हमने मोस्टली टाइम वैल्यू ऑफ मनी पहले हमने डिस्कस कर लिया था. रिस्क एंड रिटर्न हमने अच्छी तरह से डिस्कस कर लिया है. उसके न्यूमेरिकल्स, उसके सॉल्यूशंस, CAPM क्या है, SML क्या है, CML क्या है, आर्बिट्रेज प्राइसिंग मॉडल क्या है, अल्फा और बीटा क्या होता है, और इससे क्या क्या रिलेटेड MCQs है जो हमें पूछे जा सकते हैं, ये सारे हमने डिस्कस कर लिया है. सो आई थिंक इट इज़ क्लियर टू यू ऑल. If you want to communicate anything or ask anything, please do post it in the chat box. For now, thanks for watching. Like, share and subscribe for more insights. Thank you.